Hello everyone. Have you ever wondered about the companies building our unseen infrastructure? Today we'll talk about a new SME IPO, Gabion Technologies. This is an engineering company in a very specific niche. So let's talk about what they do and whether this IPO is worth watching. Think about a highway going through a mountain or a train route in a hilly area. Ever wondered what stops the soils and rocks from falling on the roads? This is a whole field of special engineering that keeps these slopes safe. This is what exactly Gabion Technologies does. So, what does this company actually do? What do they make and sell? Let's break it down. Gabion is basically an engineering company. They design, manufacture, and install strong systems that help control soil and rock. They help prevent landslides, support big hillsides, and make the ground stable for large construction projects. Their products sound technical because they are. Gabions are large, strong wire cages filled with rocks used to build retaining walls. They also make special nets and grids that hard soil and rocks in place of a big slopes. Where do they use these products? If you look at their 76 completed projects, a clear pattern appears. Most of their work is linked to a big infrastructure. Roads and railways together form more than 60% of their projects. That means their main clients are large contractors and government bodies. Let's talk about the IPO itself. What does this offer actually look like on paper? The price band is 76 to 81 rupees per share. The company plans to raise around 29 crore rupees. This is a fully fresh issue, so all the money will go to the company's growth for future, not to the existing investors. The shares will list on BSE SME platform. One important point is the lot size. The minimum lot is 3200 per share, so the minimum amount you invest is more than 2.5 lakh rupees. This is common for an SME IPO and it shows that this issue is mainly for investors with high capital and high risk appetite. Important dates. The IPO opens on January 6 and closes on January 8. It's a short 2-day window. Allotment is likely to be finalized the next day, and if you get the shares, listing and trading would start on January 13th. Now let's look at the financials. Is this a healthy business? First, total revenue. There is a strong jump in financial year 2024 and then a small dip in 2025. For a project-based business, this is not unusual. Revenue can go up and down when the big projects start or end. But here is an interesting part. Even though the revenue dipped a bit in 2025, the profit after tax kept growing. In fact, the profit has almost doubled since 2023. This suggests the company is becoming more efficient and improving its profit margins. This is a positive sign. Now look at their balance sheet. Their assets have almost doubled in less than 3 years, which shows a strong growth, but their total debt has also increased a lot. So the growth is being driven mainly by borrowing more money. The key table shows this clearly. Return on net worth is above 30%, which is very strong and shows they are using shareholders' money very well. But the debt to equity ratio is above 2, which is high and point to be notable financial risk. So how should an investor think about this? Let's look at the bull case and the bear case. On the bull side, the company's profitability is very good and has been rising. It works in a specialized niche with likely high entry barriers, and because it focuses on key infrastructure like roads and railways, there may be a steady government-related project opportunities in the future. On the bear side, the high debt cannot be ignored. The business needs a lot of working capital to execute big projects. Revenue is project-based and can be uneven. Some analysts also feel that IPO is fully priced, so the risk level is quite high. So, how Gabion compare to peers? Take SRM Contractors as an example. At the first look, Gabion seems cheaper with a lower PE and more efficient with a higher return on net worth. But SRM has a much higher earning per share, which suggests it is a larger, more established and strong earner. As per Future Ready's research and assessment, this IPO looks more suitable for medium to long-term investors than for people looking for quick listing gains. So the key question is Gabion's strong profitability enough to safely manage its large debt, or the high debt makes the overall risk too uncomfortable? Every investor will have to weigh these points and decide based on their own risk appetite and time horizon. Please note that this content is only for education and is not an investment advice. Please do your own research and consult a financial advisor before investing. Thank you.